Hi, very good morning for a brand new week. This is Arun Bhaskar from BKBB, which is an acronym for Bhaskar Ki Business Baatein. This is a channel that comes to you with policy analysis, an occasional story, an occasional conversation. But right now at 8:50 in the morning, we do news behind the news. And I'm delighted to have you here. And today, we have three very interesting items to discuss with you. My co-anchors today are Katya. Welcome, Katya. Good to have you here. And Anurag. Welcome, Anurag. Great to have you here. Okay. And the three titles that we'll discuss today are one, the Jane Street story. Second, how automobile prices have gone down or remained steady even though input prices have gone up. And the third one is a changing global order. What will it be like? And before we begin, just a reminder, please click the subscribe button if you have not subscribed already. Click the like button. It helps us enormously in our algorithms with YouTube. And third, please tell all your friends about us because we do things that many people don't do. And let's take the first story, which everyone's talking about, and that is on the Jane Street episode. And the story is going to be told to you by Katya. Katya, welcome.
So 3 years of unabated bull run and the first hint of one possible bubble and a stock market manipulation. And this is spectacular because SEBI has recently come out on Friday, in fact, had come out with this particular has unearthed a scam wherein a US based proprietary means they are using their own money to invest. They're not taking in clients' money. It's a high frequency trading from the US has been trading in India, and what it's been doing, it has been manipulating the futures market, and it has made unlawful profits of, wait for it, 32,681 crores. SEBI had given, it has banned it from the street, and it has impounded gains of 4,000 crores, which is actually nothing close to what it has made. But what more interesting is how has it been doing it. So what they do is they actually make they sway the markets using a very clever strategy. It was also nudging Nifty futures price upward. So Nifty futures is where this kind of discrepancy was found, and it was placing order above and the last rated price, and always close to the closing of the market, which means the ending day's price has been manipulated. So this is how it was inching it up, and it was getting profits from it too. So if you read social media these days, there are many stories of cabbies, retail investors, very young investors losing money in the futures and options trade. So this is one particular way. It shows that large institutions are the ones which are playing in these derivatives market, and it is setting everybody else up to fail. It looks like that to me. You can answer better. And second thing, sir, putting money at the end of the day in a certain way, in a pattern, it sounds very easy. The question I want to ask you is it that easy to manipulate the markets, especially the FNO markets? And number two, how are we going to save these young retail, not just young retail market participants? Are they left in the lurch because this is not natural? And number three, why were these questions not asked when the markets were hitting extremely new highs? So when I used to ask them, sir, why is there a new high every day in the last 1.5 to 2 years between there was a phase, there were 3 days, there were 3 months where every day market was hitting a new high. They said, no, it can't fall now because the future FNO market shows that, it's going to be at a certain level. So there are institutions putting in a lot of money. So FNO trade is very ultra dangerous for retailers. 3 questions to you.
It's a fabulous story. I'm glad you picked it up. Because this is a story which actually defines the role of the regulator.
Right.
What for the last 8 years, experts had said, don't get into high frequency trading. You can't even manage to monitor existing trades in the normal way. How will you manage high frequency trading? That was one problem. The second problem was when the NSE scandal about co-location took place. That was a clear sign that someone is manipulating the market, and you should look at all co-locations and monitor their trade more closely. And this Jane Street trades were also because of co-location benefits. They could get data faster, split second faster than others did.
Mm.
Effectively, you have a regulator that was sleeping on its watch, or not sleeping but looking the other way. You have a market which was primed to have a bull run because it pleased various people,
True.
and your foreign investors losing. I mean,
Mm.
it's a frightening cocktail, and I think we should do this story, both you and I, sometime
Mm.
soon.
Right.
But thank you, Katya, for bringing the story up. And great story, thank you. And now we go to the next story, and the story is on automobiles, and we have our expert Anurag talking about it.
Good morning. As we complete the half year mark, the tale of two-wheeler and four-wheeler markets tell a contrasting story. Passenger vehicle makers are rolling out deep discounts up to 4 lakh rupees on some electric SUVs and flagship models. Why? Because dealers are grappling with high inventory levels, about 50 to 55 days, which is above the comfort zone for dealers. Every unsold car sitting on a lot costs money, about 2% in holding costs for every 2 months. This pressure is forcing brands like Tata Motors, Hyundai, and Mahindra to cut prices aggressively, hoping to clear last year's stock and make room for new models. Yet the two-wheelers say a very different story. Here, discounts are modest between 5,000 to 10,000 rupees, with a few exceptions. Bajaj Auto, Yamaha, Kawasaki are offering a select incentives, but there's no rush to clear the decks because inventory levels are manageable, hovering around a month. Retail demand, especially from rural India, remains robust. Farmers and small town buyers are still running to secure new bikes, keeping the market healthy and the pressure off. The numbers explain further. As passenger vehicles retail sales grew by 2.5% in the first 5 months of 2025, while two-wheeler retail sales reached over 7.7 million units, supported by rural sentiment. However, wholesale dispatches for two-wheelers dipped by 2.45%, signaling that manufacturers are producing just enough to meet the demand, not more, no less. Behind the headlines, it's a dance between inventory and demand, strategy and sentiment. For car makers, the challenge is to find buyers for yesterday's models. For two-wheeler makers, it's about riding the wave of steady demand and one eye on the road ahead. What's your take on this, sir?
This is very simple. It's a good story. It just means that the markets are so competitive that earlier they tried to push stocks in the market, and now when the stocks are there in the market unsold, manufacturers are getting burnt, and they're ready to offer discounts because the discounts are cheaper than the holding costs. Very interesting way the markets function. And two-wheelers. Every young person wants a two-wheeler. The courier market has added to the demand where every young boy gets a job with a courier company must have a two-wheeler. So very interesting. And as retail goes rural, demand from the rural sectors also start picking up. Interesting. Thank you, Anurag. And now we take up the third one. And the third one is a shifting global order. The world is changing, and the US seems to be slipping very, very quickly and rapidly and dangerously. At one time, the US accounted for 50% of global GDP. Today, it's barely 30%, and it could slip further. After the Trump tariffs, expect the markets to slide and the US to lose market share. And suddenly, BRICS has emerged as a new trading bloc. And ASEAN as a other new trading bloc. And that in turn makes you wonder what is a new scenario going to be will look like. And so just look at the chart ahead. You've got 4 scenarios. The first is a scenario with the US. Well, the US can just say, no, let things remain. We will still remain number 1, which is unlikely, but still, you never know. The second scenario is that the US starts backing the G7 and tries to make the G7 more aggressive and offers concessional tariffs and new ways to promote trade within the G7 so that they become buoyant. But the US is already reeling under $37 trillion of debt. Add 3 more trillion of the new gaps that they're going to have. $40 trillion. It's over 1/3 of the whole global debt. Which is why 2 other scenarios are there without the US. And the one is that all the world come together -1. You know who the -1 is. And the second one is BRICS comes together, EU joins BRICS, and that becomes a new world order. Please remember, BRICS is already higher than the G7 in terms of PPP GDP. You can't ignore BRICS any longer. And so you have possibilities of 4 scenarios, and that can explain why Trump has been going hammer and tongs against the BRICS. He does not want the new currency to come in. Should the new currency become possible, you can expect the markets to shift even further. And that brings me to the end of today's session of the 3 analysis. And just a reminder, please click the subscribe button, click the like button, and most important, please tell all your friends about us. And this is a brand new week. Let's begin at looking at some of the questions that are coming in. Is the US a tip of the iceberg and the market bubble is about to burst and SEBI is a mute spectator? Well, the biggest speculators in the world are the US players. They think they command the financial markets. Once upon a time it was the UK, now it's the US. SEBI could have asked questions, but did not. It knew the high-frequency trading should not be allowed. It allowed it. Look at the government itself. Look at the tax concessions that are given to FIIs and foreign entities in Gift City, and the common citizens outside do not get these benefits. The government itself has been an insider trader when it comes to the stock markets. And maybe SEBI decided to go the way the government wanted it to go, forget the fact that it's supposed to be regulated and neutral. So yes, you're right. SEBI was a mute spectator. Only now the chickens have come to roost and the markets realize why it was rigged up. Let's see where the markets go. And then then there's another question. Another question is that on Katya's story, why did the government, in your opinion, not ban high-frequency trading? Katya?
So it's hard to second guess the government, but what I think there is a nefarious connection between exchanges being listed, extent of volume that they generate, and the growth in the business, also amount of liquidity that is required, that has come into trading, and the interests of people, all sorts of people, to keep liquidity aflush in the market. So it's a thing of all these factors. It's a confusion of all these factors. So I think that is what has happened. Like I said, these questions should have been asked when markets were hitting a new high every day for one particular month. So nobody asked the question then because the euphoria had set in saying India had great prospects, but long term.
Yes.
But that is a very poor logic for why it's going on a day-to-day basis. So nobody asked.
Long term is not very certain.
Sir, yeah, long term is not very certain. Long term is just belief. So, thanks.
Thank you, Katya. Great. We have another question on the automobile market. And the question is, does it mean that we should wait till we want to buy a vehicle because the prices are falling? Well, you can wait. But once the stocks get over, expect them to raise the prices again to compensate for the money they've lost. But what do you call it? Timing pricing is a very dangerous business. If you're a consumer, take the best bet available now. Don't wait for the future. You never know what the future brings. And there's a third question. Why is the euro not replacing the USD? Please remember, whether it's a USD, whether it's a euro or whether it's a RMB, both suffer from the same problems. The volumes are not large enough. To become the number one currency, the volumes have to change. And that is why the new currency exchange that China and Russia have mooted, which India has actually not supported that idea because it's under great pressure on the US, is that every country can purchase in its own currency with the country it's trading with. And since the largest trading partner today is China, expect the volumes in RMB to increase in a year's time. And that could suggest which way the currency could become king. Very interesting times when it comes to currency markets. Very interesting times when it comes to the global currency. And this is why the US is dead against China and wants to contain it wherever, whichever way possible. And that, in a way, brings me to the end of today's session. Thank you for being with us. It's wonderful to have you here. Just tell your friends about us. Okay? And I look forward to seeing you tomorrow. Another day, some more stories. And with you, we should be growing further. Thank you. Have a great day.